The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. And we're looking at a Dow that's it's persevering to the upside. It's up 30. S&P's up 4.65. You've even got the Comp Index up, and I'm going to show you the E-minis right now. E-minis up 5, and the 120-minute chart. Now, this is what I mentioned earlier in my show, that there was an alternate count. Although everything looked very much like in time, it had gone to, well, I don't want to make it too complicated for those of you who are not used to the Chapman wave methodology, but to an F, I think it's actually probably now close to a C with a little bit more upside to go, maybe a slight nudge at some point to make that requisite D, the fourth highest peak above 64.50. And what that would do is say, okay, you've made a rectangle, high-level consolidation. There should be some kind of a pullback. My thinking was, and it still is, that towards the end of the day, we might see some kind of a pullback. Most importantly, let me just talk about this. In the Dow, I didn't do this in my show. I should have done it in my show as well. First of all, my service is the opening call. It's a daily comprehensive look at the markets. I give all the parameters that we're looking for. I also give, I wonder if I can do it now. Let me just do that because I think it'll be very interesting. If I can go right here, get that up, and there it is. And has it got all the charts? Yeah. Let me just show you something here. Every day, I'm going to slide this over. I believe you should be able to see it. Let me just grab there we go, 1 second, and I'm going to go to Tiger TV, front page. I'm going to go to Tiger TV, your handheld, click here. Just so easy, unbelievable. I love this technology. I usually get the volume off, otherwise there's a real problem there. So easy. That's it. Okay, so you can see what I'm seeing. So this is what I give my subscribers every day. I explain what I'm looking at in the E-mini. I don't give a call. This goes out my first chart that I send every morning, pretty much the first chart that I send. And lately I've been doing my best to send it over the weekend. By about Sunday or so, sometime earlier, I send out my charts, the Dow chart, weekly, monthly, and the daily, separate charts. I send them out over the weekend, then I'll repeat them again on the Monday so that you can get a preparation for the week I'm looking at. That's usually first. Then comes my overview, and then usually I send out the E-minis. And I don't in the E-minis give any directional, there's no trade, in other words. There might be a trade that you see, but I don't give it officially. And what I'm saying is, here the daily E-mini shows the power of the completed Chapman wave 1-to-1. That's that move down. This is like Larry's, the reason why I wanted to show it. Larry talks about the A to B equals C to D. I have something that I use that is similar, but I like it as a diagonal time reference. And look, the A to B, which was peak E in the Chapman wave at 1892.50 on the 4th of April, went straight down to 1830.75 on the 8th of April, then bounced on the 10th to 1867. So it goes A to B. That's that lightning rod pattern. That's the schematic. And now we're looking at the C to D. From the 1867.50 should take you to about 1807. What it went down to 1803.25. That completed the move. As the stochastic and the on-balance volume sharply turned up, MACD started to turn a little bit, and that gave you this big move to the upside, which so far is over a 50% retracement. And I think the upside is a little bit limited here, but so is the downside. And one of the reasons was that this 120-minute chart shows that we're in this kind of rectangle sideways move with a chance of retesting up to the 18, I think it was 67, I think it was, on the left side, 50 area. And that's exactly. Now, the real thing is, let me get out of this, and I'll show you. Am I going to do the right thing? Yep, I am going to do the right thing. going to go right here and click on that, and there it is. That is the pattern that we were looking at, just slightly higher. It could still go slightly higher. I don't know. All I know is that the pattern I'm looking at says that the stochastics at 85%. That's good. MACD's turned down, but not with a very wide distance or beta between the fast-moving average and the slow. So that's what I like to do. That's what I do in my opening call, and all these different, am I going to be able to do it again? Am I going to be able to do it again? Give me 1 second. Yes, I am. And then I show all the different chart patterns that we're looking at. For instance, here's a detailed look at, I want to do something. We don't have this as a trade, so I just want to know it now, if I can do that. Well, maybe I won't be able to. Oh, look at this. This is the triple yield. This is the triple yield chart. This is the yield on the weekly basis of the 30-year, the 10-year, and the 5-year. And I discussed for the first time in quite a while, I'm beginning to see a divergence as the 30-year yield is going down. And right now the TLT is up 38 cents at 110.43. That means bonds are up, yields are a little down again. And the 5-year, the 10-year has held steady while the 5-year is close to the highs. I don't remember seeing that kind of divergence before, even over there where you would have expected it back in 2011. So this is something that is very important, and that's what I discuss. And I show all the charts of the stocks that we have, why we have them, what we're looking for, etc. So let me get out of that, and I'm going to go, oops, I didn't need to do that. Let me get out of this and go to the charts themselves back again. So let me just tell you that what I'm looking at here is that minis have held very well. In a larger context, the 9-period moving average is at 1849, and the resistance is at 1867.50, and today the high was 1864.50. So we haven't got to the 1867.50 area. I suspect we might be able to test it in the next day or two, but I'm also thinking that we just need a little bit of higher, just a little breather after 1, 2, 3, 4. This is on the 5th session. After 4 great sessions, I'm thinking the 5th session should have a little bit of a rest. So I'm going to continue the calls after my show, which is the 11 o'clock to 12 o'clock show called the Tiger Technicians Hour. We had a caller that I asked him to hold because I could not get to him. We had many callers before that, and that's Ron in Denver. Ron, you wanted to look at...
Hello, Basil. I appreciate you taking a look at Verinex, BHC.
Tell me about this. Is a domain.
Okay.
What exactly do they do?
Well, basically, about 2 years ago, a year and a half ago, they won a huge lawsuit against Apple for patent infringement. And then this was appealed, and it went to the appeals court about a month and a half ago. The appeals court looked at it, and they're waiting for a word from the appeals court. I believe they're going to get a very favorable ruling from the appeals court. That means Apple will owe them about $800 million and about $500 million every year in royalties.
Wow! Oh, so not only that, but they will get compensation for the infringement, and then they will continue to hold the patent that Apple uses, and they will get they'll get a payoff on that every year.
Yeah, the circuit judge in Texas ruled that they owe them almost 1% royalties on all their sales. And
Apple's 1% royalties. That's incredible. Yeah. That's an annuity they've got there.
That's on about $100 million a year of their sales. They do about $150 billion, but on about $100 billion of it, they're going to owe about 1% royalties. And,
wow. Okay, so then now let's look at it on a technical base. So I'm going to be dealing with this. I'll tell you what I'm going to do. Because we don't know when and what the verdict will be, you got to guess, but that's still a guess. You never know in the judicial system exactly what's going to happen. Let's just treat it purely on a technical basis. That's number one. Number two, I'm going to warn everyone who's listening that you have a special rapport with this company. You followed it. You understand it. You've got this. There's something that you're doing that is slightly different to the usual technical picture. One of the reasons why I mentioned that is that we're talking about a stock that has pretty low volume. That is, today's volume is 123,000. Yes, on Thursday, the entire volume 380,000. Day before was 444,000. So that means getting into the stock is fine. Getting out might be a little tough. That's number one. And number two, when you're dealing with lightly traded stocks, when they have anything to do with news, good or bad, you're not just talking about a 12% pop-up. You're talking about the potential of something that could go from $13.70 right now. This is VHC is the symbol. It's up 11 cents to it could really very quickly either double or get cut in half. That's just the kind of thing it is. So I have to put that out as a caveat. Now, talking about the stock, I'm kind of impressed about two things. One is it had a 41.93 high. It's a double top, 41.77 in 2011. Then it comes along and back in July of 2012, it's 41.93. I love the way stocks so often go within pennies of previous long-term highs or lows. I'm even thinking highs are even more important. And then they turn around and they give it all back. And this has done exactly that. And where is it right now? The MACD is not so good in the monthly chart. The stochastic's just flattening out 11%. But it's making a doji candle sitting on the 200 period moving average. So that perked my interest the moment I saw it. I don't like these long-legged wicks. This must have been another news event. This is exactly what I'm talking about. In the week of March the 7th of this year, it's trading. It opens at it opens at $90. Then there's some kind of a news, and it goes to 25.45. That's 7, 8, 9. That's 9 points. That's over a 50% jump, and then it closes towards the low of the week. So that's what I'm talking about. Now let's look at it on a weekly basis. The stochastic is flat.
Thing about it, they're 17 million shares short. That's one third the outstanding stock.
And so that concurs. That is exactly what I'm talking about. That there's anything like positive news, wow, this thing could just take off, not like a rocket. It could just gap up, without giving people even a blink of an eye to get out. So I do like that. Now here's the other thing that I'm looking at on a weekly basis. The candle that's forming now in the first 3 hours of the first week of the first day of the trading week is a nice candle. But I can't go by that. I'm going to go with a lot of ifs in the weekly chart. I'm going to go with a lot of what is in the daily chart. The daily chart has just retested the 1268 low of the 26th of March. It went down to a lower low, 1210, but it closed well above that. That forms the H pattern that has the potential to form an M pattern, lowercase m. So far I like it. If you can hold on, do you mind holding a little bit more? Because I think it's interesting enough that I can give you a trade within the trade.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento, and we're on with Ron Denver looking at VHC, which is Vernex Holding Corporation, and telling us that there is a lawsuit that's been filed, and they might get a favorable ruling. Now, this is what do you have a position at all?
Yes, last week I took a good position.
Okay.
So I don't want to tie you up too long. I just, go ahead.
I was just going to say, we both know that this is speculative. There is a bias right at this particular point that would say if 1210 support is taken out, be careful until that ruling, because anything can happen to the downside, but you do have the support that there are a lot of shorts in it. It's the upside that we both look at, and I suggest to you that the upside has two levels to watch. One is you want to see it take out $14.98. That's $1.20 from here. It needs to take that out, and if it takes it out immediately, you're looking at the chance of testing $15.82. That is $2 higher. How it happens and when it happens could be either very quick, or it's got this pattern of making the H, lowercase h, that turns into an M. I'm going to draw it for those of you looking at my charts. This is the daily one on the left. And that says if it stalls and it's not able to break above 1498, but instead it just stalls around about here at about 30, it's at 1375. If it stalls at 1427-ish to 1441, and then starts to pull back, that just says be careful. It's just biding us time in this H that goes to an M pattern, and then I call it the continuous M pattern, just within a trading range of slightly lower highs, slightly lower lows, nothing to break down yet. Although, as I say, I'd be a little careful on part of your position if it did take out. I don't know if you could hang around if it took out 12.10, but I would not.
Okay,
I would not hang around if it started to take out 12.85. I'd be a little cautious and say,
Can I ask you one other thing? It's different. On this Ukrainian situation, what kind of premium do you put in oil? And if this thing were to settle down, would you like puts on USO?
Puts on your USO. So I'm looking at, I've still got crude oil going a little higher. It's in leg C. It's made a peak C. I'm suspicious of, to tell you the truth, right at this particular moment, I think oil has a little upside left, and I'm going to deal with it. I'm looking at this very closely. I'm looking at the USO. I did a little work over the week on USO, which is the same thing. I think this is, am I correct in saying this is in A, B, C. Oh, this has already gone to a D. Yeah, I don't see anything yet in crude oil because the stochastic is stronger than MACD is good. So, would I be looking at shifting the USO? Well, I guess the way to play it is the SCO, which is ultra short. You know what? I have to hold off. Don't see a trade yet. I think we're getting close to the chance that crude oil could pull back, but I haven't got any signal yet. I'll talk about it on my show, and then every day I'll make a note. I'll put oil as one of the things that I will talk about because it's worth watching. I don't see anything just yet. So I hope that helps you, Ron.
The Ukrainian situation had been moving oil up a little bit.
That's right, and I don't think that's going away, and I think that's just going to sit there. I'm not sure I'd even want to short, but the real issue is that I missed a really good opportunity of being long crude oil when I spoke about it. Someone called and said crude oil, and we spoke about the XLE, and I said no. In both cases, oh, look at that XLE skyrocketing. I don't see shorts there at this particular point.
Thank you. Bye.
Thank you very much for calling. Thanks for bringing that up. So we're going to go to Al in Boston. Al, how are you?
I'm all right. How are you, Basil?
I'm good. I'm just noticing, I think, I don't know if I'm wrong, but McFadden was leading the pack all the way, and then I lost track.
The American guy won from his father brought him over from the Sudan when he was very young. So
he won?
He was
very
nice.
Well, I hope we're not breaking news to anybody who wasn't watching, but and do you know about the women? Did McFadden come in?
I don't know about the women's.
Yeah, she was leading, and the suggestion was that she was running too quick a race right from the very beginning, but that was a plan. But, you plan like that, it's the end that counts, and I don't know if she was able to hold it. If she was, that'd
That's
be fantastic.
Right. That's what marathons are. They're all about the last couple of miles.
You know what? They're all about crossing the tape. I'll never forget the story I read years and years ago about Zatopek, I think his name was, from Budapest at the Olympics, and he collapsed, and he still managed to crawl across the tape to win. It was unbelievable. So yeah, marathons are about crossing the tape. And the South African won the wheelchair. That's fantastic. So you wanted to look at
gold, but long term from the monthly chart.
Okay. I haven't talked about the monthly chart today. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, we're back. Basil Chapman, sitting for Larry Pesavento. Trade what you see. My own service is called Opening Call. It's a daily newsletter, very comprehensive newsletter, giving all the parameters to watching the different key indices, GLD, TLT, DIA, SPY, Qs, etc., as well as the Dow and what we're looking at and why, how to use the volatility index, the trend for your trades. And we're on right now. We're looking at the long-term chart gold. It's Allen Boston. And so I've got continuous contract. And what I show is different. I'm going to get rid of this Fibonacci. You know, sometimes I use it, and sometimes it just gets a little bit too cluttered because I only use it for certain aspects. What I'm looking at here is that H pattern. I'm just going to show this chart for a moment. This is from my CD introducing the Chapman wave. Whoops, this is not from my CD. This is from my. Whoa, we've got a lot of stuff on here. From my CD, it's called the H pattern, or the dreaded H pattern. And it basically what it says is that from a top, a DEF peak at the top, when you come down, you can start to see scallops. That scallop arranged with that arch formation. If it takes out the left side low, you've got to be careful because it can keep coming down. So, oops, at a certain point, it can stop. Maybe it can even make a larger H. Then what happens, it makes a little dip below the left side, and then it climbs back up, and then it forms the lowercase h. These are all lowercase h patterns that eventually go to an M, lowercase m, and that can become a continuous M pattern. Well, if you look at this pattern, this is slide 335 out of 476 slides in my CD called Introducing the Chapman Wave Methodology. It's only available at TFNN. There's what it looks like. And it gives is even a glossary, about a 10-page glossary of terms and chart wave terminology and explanations. It's a very detailed look at different chart patterns. You'll see this is exactly the same pattern here. Gold did it once when it made the top back in September of 2011, came back, did an arch formation, went to a slightly lower low for a trough B, then it went up again, made the peak A minus, fell back, and broke that decisively. Now it's doing the exact same pattern except for one little thing. So far, it hasn't taken out the high of, that would be the high of August of 2013. I've got a price of 1433. It's a smooth, continuous contract, so that price changes quite a bit over the period of time. So what is important is that it's back under the 9-period exponential moving average. The MACD is deflecting lower. Stochastic's trying to rally. It hasn't gone to 20%, which would be at least a little bit of a positive. It's still at 18.9%. And my suspicion is that this is going to fail. And then we've already moved in. This would be May. It says in May there's a chance we're going to test the left side low of June of 2013 if there is no rally. And this weekly chart is saying so far there hasn't been a decent rally to get us in the continuous contract back towards the 200-period moving average. So it's like a little mini H right here in the weekly chart, and it says that if we take out the low, let me go to now the contract that you're looking at, that's the June contract. If you take out, that means if you close decisively below 1277.40, that was the low of the week of the 4th of April, there's really not much support until you get into, oh no, I can't believe it, until you get to 1233. So this is really an important week, and I drew in this pattern months and months ago, this H pattern that goes to an M pattern, and so far that schematic, that template has been true to form. And on the daily basis, we're down 7 in gold at 1286.50, and it's taken out the left side low so far. I don't know if it's going to close below that low, which was the low of 1284.40. But it looks to me like the most important thing is that 1277.40 low of the 1st of April. If that gets taken out, there really isn't too much support for a while in gold, and that would suggest that the gold rally is actually over. I was thinking the best case would be that we maybe make a C, but I don't think we'll make a D. I'm not even sure we're able to make a C at this point in the weekly chart. So do you have a position in gold? Is this just kind of general information?
Yeah, I got quite a bit in my retirement funds, and I'm losing pretty good.
You have what?
I have a lot in my retirement funds, my wife's retirement fund and my retirement fund.
All right, so this is what, if you're in a retirement fund and you're looking at long positions, then my suggestion is that, I really hate to do this with retirement funds because you really like to trade as little as possible in those funds if you are a long-term buy and holder. But I'm thinking that the upside is fairly limited, and
even longer term,
Yeah, but what I'm saying is that I think longer term. If I'm looking longer term, I'm thinking that later this year, I think we're going to be going lower.
No kidding. Wow.
So that puts it in a difficult position because the upside says, between 1286 and even the last high of 1392, that's a nice percentage. That's 100 points, 5% or something like that. Yeah. I don't want, what I'm going to suggest? I'm going to suggest that you think about just taking a little bit off, just lightening up a little bit. That's number one. You don't have to do it today or tomorrow. Look, another 40 points either way. It's not going to make a difference. This is Monday. Give me a little bit of time. Let's just talk again Wednesday, because this is a portfolio I do not want to be part of, making a rash decision to say to you, do this when you've been holding it so long. So here's my suggestion. My thinking is that I'm going to suggest to you to take something off not to be heavily in gold, even if it's a longer-term position, because if it goes down lower, you can always buy more later on. And you're already in it if it goes higher. So my suggestion would be to lighten up a little bit. So let me think a little bit more about it. Give me a couple of days. Wednesday, let's look again, and then I'm going to make a more definitive decision on what I'd be looking for, whether there's a chance that gold can now rally enough for it to be worth your while holding or waiting to get out, or whether it's better to just start whittling away at this particular time. Is that okay?
That's tremendous. Thanks for the
Thank
input.
you very much for calling, Al. So give me a call. We'll talk a little later in the week. Thank you.
will.
Let's go to Ben in Tallahassee. Hi, Ben. How are you?
Very good, Basil. How are you?
Good. You wanted to look at the S&P longer term?
Well, actually, do you see the S&P? Do you have a strong bias? The S&P is simply in a bounce off the recent lows.
Okay. Well, there's another good question, because the S&P has a very different chart to the IWM at this particular point. And what I'm looking at here, now let me just do this. I'm going to go to the monthly chart. Oh, I'm pleased you brought this up, because I spent a ton of work. I sent my subscribers out a really detailed report on the Dow, which has a very similar pattern, especially with the monthly, going into what I call the Chapman Wave Inside Track. What does that mean? Let me just go to my to the chart right here and type in view, show me, what does it say? Edit, find. So this is called the Inside Track. And what it says is it's a channel line within the channel line. And what you can see here in this chart of the Dow from way back in December of 2003 is that it was descending and making arch formations with lower lows and lower highs. But within that, you could identify that there was a channel, and within the channel, just a little bit from the top, I drew in a dashed little red line there, and a little dashed green line at the bottom. And that's what I call the buy zone at the bottom and the sell zone at the top. And every time it gets to the top, you've got to be careful. If it doesn't break out, which would be very positive, invariably the price pulls back. So this is repeated characteristics channel lines. This is from my CD introducing the Chapman Wave methodology, slide 39. So let's look at the real thing. Here is the inside track. There's the channel. We're not even close to the channel anymore. We're in this inside track resistance. And that inside track resistance is saying that right here in that green line area, the price keeps getting repelled. And the S&P has gone to leg D because this month it made a new recovery high. And the new recovery high is at 1897.28, trading right now at 1868.96. Quite a little bit away, but on a candle on a monthly basis, let me expand this. I've been wanting to do this for a little while. If you look at this little candle here, potential doji candle, it says the MACD, finally the histogram, the distance between the 9-period moving average differential and the red line is narrowing a little bit. That's the green and red lines at the top. This here is the RSI, and that RSI is saying, I'm not making the same highs I was making just 4 or 5 months ago. I'm a little lower, so there's a bit of a divergence. The stochastic on the monthly chart of the S&P 500 is saying, I've just made a M formation. I'm pulling back, but I'm still at 94%. That is really strong. So I need to drop below 80% to start getting sell signal, sell mode in the monthly chart. So far, we're not even close to the 9-period moving average of 1791, which is 63, whatever it is, points away from where we are right now. So the issue is, and then the unbalanced volume, that's the little blue line over there. That blue line did make a higher high, and it's pulling back, but it's still very good. We've got a week to go tomorrow. I believe it's a week to go tomorrow before the end of the month, and anything can happen in the week. I'm suspecting that there's enough inner strength that we will somehow move higher, but remain when the close comes on. Let me just double check here. Let me go to the So that'll on the 30th. Oh, it's Wednesday. That's next week, Wednesday. So we're going all the way to Wednesday. That's a long time in the market. I'm suspecting that we actually close underneath the green line, and that's my suspicion. And that green line is underneath the high that's just been made, recently made at 1897.28. If that's the case, and if in fact we close with a doji candle that is a tiny plus sign, look to the Japanese candle pattern. If that's the case, then A becomes really important because a close below the wick, in this case, the close below 1814.36 would say, uh-oh, be careful, you're about to test 1791, the 9-period exponential moving average. On the upside, and I'm going to go through a couple of stocks in a moment to show what I mean. On the upside, if they're close above, let's see, so I said 97. If there's a close above 19.05, if we get into the 19s in the S&P, I would have to determine that that's actually very positive, and that even if there is a pullback in May, even if it's a very sharp one, that a worst-case scenario would be a retest of the low of this month into 1791. Well, if that's a worst-case basis, and that's a good sign. So as I'm looking at it, the higher we go in this time frame in the next week, the higher you get support for the S&P. If in fact it starts to deteriorate and going into a week from Wednesday, the end of the month, going into that, going to end of this week, the beginning of next week, there's been deterioration. The S&P is now down at it's at 1868 right now. If it's down at 1857 to 1853, that would give you that candle that says we're going into the middle of the wick. That is a perfect doji candle. Other doji candles have been very important before, and how we close in the month of May is going to give us a lot of information. Now, that's talking about this green line as a very strong trend line resistance. What would happen is that if we closed nicely above it in the 1900s, all of a sudden what you've done is you've turned the former resistance area into a containment cushion area. And that would say something decisively negative, really negative, needs to happen. And then you're looking at a much deeper pullback. So we've got a break coming up. I hope that helps you in some ways. You know what? If you want to hold on, I'll just give you some numbers on the upside when we get back. Okay?
Very good. Thank you, Ben.
I'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. We're back. Don't forget, Daryl Martin coming here. Fabulous show, Diagnostics Trading Hour. And a couple of quick questions here. I'm not sure I'm able to get them, but I want you to say, so what I'm looking at here, when we're looking at that monthly chart, and we've been looking at with Ben from Tallahassee, Florida, we're looking at the S&P. I then went to, during the break, I actually showed the NYA, the New York Stock Exchange. That's 1,800-something stocks. Also, potential doji and a leg E. Now, I have to say two things. One is in the Chapman wave methodology. I have to respect that when you start to get a doji in a D, E, or F, you got to respect that, because a pullback from that level says you might be making a more serious stop than you think. So I got to keep that in mind. I'm just looking at.
Basil, are you there?
Yes.
Yeah, I'm sorry. Maybe a better question is I'm thinking this is a bounce, only a bounce, and I'm trading it that way. Maybe I'm totally wrong, but and then I'm just looking to short at the upper limits, and I guess that was really my main question. If you think I'm just being way too arrogant, trying to think that way, or if you think it's just not enough information the way you see it. At this point in time.
Let's do two things. One is we're about to run out of time, so I'm going to do this very, very succinctly, because that's a fabulous question. The question really is, in a larger context, have we made a kind of a top that says that this is just a bounce because we are going to go down? And my answer to you is that as long as I'm seeing in my core Dow stocks, General Electric, which saved the day in that weekly chart by going to a leg D, even though it's a D, it's a nice move so far, a good candle. IBM is the only weak one out of it. IBM plunged on Friday, and now it's trying to get back. It's up 2.39. So far it isn't breaking down. And you've got Triple M, which is strong today and getting so close. 140.43 was the previous all-time high. I've got this as a gray C. In other words, it's a leg C, but underneath the previous high. But it's at 138.35. 2 points. I mean, 2.5 points could... 130, yeah, it's 2 points. It's nothing to get to a new high and an all-time high. And UTX is in the same position, acting quite well here, very close, in leg, and I have to call this F at this point, but it could be a recycled instant restart. So my technicals in the monthly charts are still too strong for me to come out and say, that was the top and then we're going down. I think this is the continuation of a rotational movement. I'm going to make it real easy for you. Stick with the VIX index. If that volatility index, which is at 13.40, starts to climb into the high 15s and 16s, this market's going down, and that's the way I'm looking at it. As long as it stays in the low 14s or the 13s, that is good action. That's buying pressure. So that's really what I wanted to give you.
Very good.
So I'll be spending more time. Every day we're going to be looking at this, but at this point I'm thinking that this retracement has a little bit to go, and I don't know where it's going to stop right now.
Right. No problem. Great. Thank you for that feedback.
I just don't want you to get in and out of positions that I'm guessing at. This is what I'm looking at, and I feel more comfortable saying you got to wait a little bit because I haven't got the indications to say yet that the VIX is going to go much higher because it needs bad news and continuous bad news. And until we get the higher VIX and the continuous bad news, whatever it is, I have to say there's buying pressure in some areas, selling pressure, like Google we spoke about, looked very weak. There are certain stocks that are looking very strong. So I hope that helps you there, Ben. Thank you for calling.
Yeah,
so now let's just, as we're about to wrap up, let me go to a couple of things. Number one, my service is the opening call, and that's a daily newsletter. Go to the front page of TFNN. And don't forget, you've got Tiger Dollars you can use here. This is fabulous. It means you're getting a discount for what you're going to buy. So I'm going to state it once more. So the VIX index remains low. It is buying pressure. The Dow has resistance in about the 16,470s, and it has tremendous support at 16,300.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.